And just to refresh everybody's memory, you'll recall in that same very short period of time, we watched Goldman Sachs reform as a commercial bank holding company, Morgan Stanley reform as a commercial bank holding company. We watched the collapse of AIG, the bankruptcy at Lehman Brothers. Bear Stearns had already gone, and the Merrill Lynch resolution was a John Thain-led sale of Merrill Lynch into Bank of America on 48 hours due diligence. And now, as we see Bank of America deal with the consequences of their decision to try to step into the breach here, think they could pick up a brokerage on the cheap, and now it's blowing up in their face, and the U.S. taxpayer, once again, thank you, American taxpayer, taking care of things for the bank CEO.
We say what you want about John Thain, but he knew enough to hit the bid that was out there at the time.
Fair enough, but is he ultimately taking advantage at this point of the American taxpayer by selling a crappy bank to the American taxpayer by way of Bank of America?
Absolutely.
Right?
Absolutely. But you know what? But he hit the bid, DR. I mean, I'm not going to...
I understand. No, ultimately it's our politicians that are responsible for this, I suppose. So they created the laws that allowed the bank CEOs to do this, and now they're the ones throwing money around while they, again, let everybody keep their bonuses.
Ultimately, it's Alexander Hamilton's fault, and I said it before, and I'll say it again. We should go down the street, exhume him, and shoot him again for creating this entire mess. But I tell you what, it's been 14 days since we got to this merger happened. Now Bank of America is already going back to suckle at the government teats to get more money for this. There is no end. No one's too big to fail. Just let them die and let the chips fall where they may.
I mean, I suppose no one at this table is any more qualified to answer this than anybody else, but you do have to start to wonder, Peter, Tim, at what point they will actually allow some of these banks to fail in an orderly fashion and start using taxpayer capital to support the development of actually viable banks as opposed to just throwing money into holes that were created by idiots.
I think it looks like they're at least going to try to establish the good bank, bad bank thing, which it sounds like at least where Citi has to go and where the government, in an attempt to recoup as much as possible, which doesn't look like a lot here, has no choice. So, out at Bank of America, I'm not sure we're anywhere near the same place, but people have questioned this whole model. Right. I don't think it's going to work.
Hold on one second, Jeff. Here's the overarching problem. And this Merrill Lynch situation, going back to the U.S. government, is just the latest indication of it, but it's all the same problem. These banks accumulated and created assets that are not worth nearly what they hoped or thought they were going to be, and they continue to depreciate in value. Just because we clicked into a new year does not mean, Peter, that they didn't create these assets, right, that they do not deal with the consequences, and it's actually a vicious circle because as we lose 500,000 jobs a month, that's that many more people under distress for their credit card, their mortgage, and all the rest of it.
And potentially, I think Citi could be the name. You're talking about, are they ever going to let anybody fail? Right. Well, fail in the respect that, will they let this stock continue to go lower? Absolutely. Right. They're not going to be able to prop it up necessarily. If you take a look at the option activity, it's been extreme. If you take a look at the stock itself, the pressure on the stock underneath $5, right, traded almost 700,000 options today, Dylan. It's telling you right now that the concerns are out there, and Citi going lower is something that
Hold on one second. John Malloy, who's our producer. John, do we have David Conrad with us? I know we had him booked from Keefe, Bruyette & Woods. Is he here? Can we get him? Go ahead, Jeffrey.
This too big to fail thing. Someday, if we're lucky enough, our grandkids will sit on our lap and say, Granddad, did people really think banks were too big to fail at some point? And we will laugh long and hard and say, well, some people did, most people didn't.
We do have somebody with us who actually who's better informed on the subject of banks and bank holding companies than anybody on this desk is, for sure. You're looking at him, David Conrad. David, before we get into the specifics of this, can you answer the question as to why it is we are not able to encourage new bank formation or healthy bank formation and instead continue to throw capital at distressed and sick banks?
Yeah, well, I would echo your comments that we are favorable in terms of the good bank, bad bank. I think we have to ring fence some of the bad assets and separate them out to attract new capital into the industry.
Why are we not seeing, what's your opinion, or is there a legal barrier? What is going on with the politicians in this country that they're focused on hurdling money at these institutions that put themselves in this situation and not in creating a system that actually manufactures a healthier banking system in this country?
Well, I think one of the issues is kind of their misinterpretation of TARP in terms of investing preferred stock into the banks. I think the markets quickly realized that we're holding the common equity here, which is obviously subordinate to TARP, and the common equity is taking the first loss position in all these credit costs. And likely we don't think the banks can really continue forward with a very low TCE ratio. So it's a depletion of common equity that's keeping these stocks driving down, and I think the government missed that point with the TARP.
But is there a legal barrier to them forming new banks? Is there a legal barrier to them firing the guys running the current banks? Is there something that I don't know that's causing them to behave in what appears to be such an apparently foolish manner with so much money?
Well, again, I think they're trying to catch up, and they thought the TARP program would give a little bit more firm footing on the equity, and clearly that's not the case.
Hey, David, this is Pete. A quick question for you. The fact that they actually allowed the Smith-Barney spin-out towards Morgan Stanley, are they essentially telling us there that Morgan's had enough of these write-downs, that Morgan is essentially, in this case, the good bank, Citi's the bad bank, Morgan's going to survive? They're picking up this entity on pennies on the dollar right now, but they potentially could build this if we start to see any kind of a rally at all in the economy in any way, shape, or form. Suddenly, they are a bank that can survive.
Interesting question.
Well, yeah, I don't cover either of those companies specifically, but yeah, you would take the implication, at least, that Morgan's in a little bit better position than Citi, and certainly from the regulators looking at Morgan, giving them something that gives them more fee income and a little bit away from proprietary trading is a positive.
Two things quickly. One, on Bank of America, what is your view on the most recent bit of news? In other words, is that greatly disturbing, moderately disturbing, or totally fine?
Well, it's obviously not totally fine. Hopefully B of A can still pull this off. I think the issue that we're seeing is what happened with the bond market through the quarter and what's going to happen with the mark-to-market probably on Merrill's balance sheet. So that's causing them to come back to the table.
And then my last question here, they sold 51% of Smith-Barney to Morgan Stanley for $2 billion and change, $2.7 billion. Citi records a pre-tax profit of $9.5 billion in doing that sale. How does that work?
I honestly don't cover Citigroup, so I can't.
I understand that. But if let's say I'm running a bank and I sell something to you for $2.7 billion, I sell half of it to you. Let's say the whole thing now is worth whatever that is, $5.4 billion. Right. Is there any accounting mechanism you can think of that gets me to $10 billion?
Well, I think the $2.5 billion was the cash portion of the transaction, and then you're valuing the combined company and your interest in that combined company.
Got it.
The good bank gets $10 billion, and the bad bank eats the 8.
All right, and the American people get a
the shaft.
Yeah, they get the shaft.
That's what
they get. Here,
part of the auto bill.
Here, America, enjoy the shaft. The CEOs enjoy their bonuses, and we'll have a good time. Anyway, we're back with more After Hours on Apple, Bank of America. Obviously, a busy day, and it'll be a busy week here. J.P. Morgan earnings tomorrow morning. Citigroup with what will be not only earnings, but I suspect some restructuring announcements as well. Come Friday. We're back right after this.